Hello, this is John. I'm coming to you from Thousand Oaks Insurance, and I hope this video finds you doing well. Today in this video, we'll be discussing California's sustainable insurance strategy, why it matters, and realistically how it's going to affect you and what you can expect. It's really no secret that California's insurance market is breaking down. I mean, we've lived under rules written under Proposition 103 for over 30 years now, and these rules were never updated to handle climate change, wildfire risk, global macroeconomic forces like inflation, and the result of this is families and businesses, they can't find coverage and they can't afford it, which is, of course, a huge problem when you're trying to create a healthy marketplace. So, after years of delay, the state of California is trying to fix it with what's called the Sustainable Insurance Strategy. Let's be clear, it's a step forward, but it's long overdue, these changes. I mean, for years and years, California's insurance companies, they had no obligation to write policies here. If they didn't like a risk, then they could walk away. So that's left a lot of homeowners scrambling, and entire neighborhoods are dependent on the California Fair Plan, which was designed to be an insurer of last resort, becoming an insurer of first, or in many cases, an insurer of only resort, which is a huge problem. So only now, after people have lost coverage, are paying 200 to 300% plus premiums, and many companies have just gone and left the state entirely. There's real reforms being pushed now that all these negative impacts are being realized. So, what is actually changing with this strategy? So, there's a few things. I'm going to go through them with you right now. So, with this sustainable insurance strategy, I mean, what is actually changing? And I'm going to go through a few of those things right now with you. The first one, which is pretty important, is there's a guarantee of coverage. For the first time, there are companies participating that they will be able to write more policies in very high-risk wildfire areas. And it's a big deal because until now, these companies, they could just say no and walk away, but it's not really going to be the case anymore. They're going to have to allocate a certain amount of their business to these high-risk areas that no one wanted to touch before. So it's introducing more options. And I alluded to this earlier, but Prop 103, the process is being modernized, and if you're not familiar with Prop 103, I'll put a graphic up here, but basically it was voted in by Californians over 30 years ago. It's a regulation that prevents insurance companies from just blindly raising or changing their rates. They have to file a request to change their rates with the Department of Insurance, but you can read more on that here. I'll be sure to link it in the description as well. But there's going to be updates to the regulation, updates to Prop 103. It's long overdue. It's being modernized. There's going to be a lot more transparency in rate making. So what we're looking at when I say that is catastrophe modeling. Pricing is going to reflect actual wildfire risk that's being forecasted instead of relying on historical data, which is very inaccurate, and with how quickly the climate crisis is evolving and changing, it's more important now than ever to forecast data in the future. Faster rate reviews. With Prop 103, every company files rate sometimes multiple times a year with the Department of Insurance, and naturally it takes quite a bit of time. It's a bureaucratic process. I mean, it's a government agency, and working in tandem with insurance companies, it's not going to be a quick process. So instead of taking 8 months, it might just take 3 or 4, but cutting that in half is a big deal. We're looking at changes to the California Fair Plan, which again, the California Fair Plan, it's a pool of participating insurance companies, and it's a very basic, very bare bones fire insurance coverage. It's an insurer of last resort. So the Fair Plan is expanding. It's a double-edged sword because it does provide an option for insurance if you are buying a house, if you need to get insurance, if you need to protect yourself, transfer some risk to another party. Yes, you have that option. If you can't find coverage with a private company, you can get it with the Fair Plan. But if too many people end up using this program, which is very much the case, I mean, the Fair Plan, over 500,000 homeowners use the California Fair Plan, which is insane. It's one of the largest home insurers in the state of California, which is unacceptable. It signals that the insurance market in California is very unhealthy and unstable. So that's the situation we found ourselves in right now. Climate risk being built in, the rules now factor in wildfires, drought, natural disasters. This should help bring competition back into the state. It also means that some areas you will see increased insurance rates. However, there's going to be downward pressure on pricing when there's more competition introduced. Not to mention an insurance company charging a high rate versus the Fair Plan charging a high rate. The Fair Plan system, their back-end billing support and claim service is very bottom tier. It is not good. If you're paying a high rate with a private company who's invested in their website, who's invested in their infrastructure, and has good servicing, it's going to make a world of difference between those two options. The Fair Plan, it's expanding, but it's meant to be a temporary solution, not long-term. Ideally, you would want to have a policy with the Fair Plan for no more than a year or two. It won't be painless, but the more competition, the more competitors that are offering, the better. So this isn't a silver bullet, right? Rates are still going to rise. Some areas will struggle still, but the sustainable insurance strategy, it's going to force insurers to stay in the game. This is a long-term stability play. It's not going to be a snap of the fingers, overnight everything is fixed type of situation. Looking at increased accountability and transparency, it gives consumers more stability. And again, it's years late. This should have been enacted 10 years ago. Insurance, it shouldn't be all about politics. It's a heavily regulated industry, but it's really, at the end of the day, it's about making sure that you, your family, your business can recover from a catastrophic situation. I mean, that's what insurance does. Insurance has saved countless livelihoods of people, which is enormously impactful. A lot of people see it as a cost, an unwelcome expense. Hopefully we can see more good being done by consumers. So thank you very much for your time. Please like and subscribe and hit the bell to receive notifications so you don't miss a video, and very much appreciate it. I wish you a very nice rest of your day.